welcome to Greenville Radio. I'm your host, Kendall Titchener. On the show, we share how notable leaders apply environment, social, and governance factors in business. Today, we're joined by Peter Leighton of RE Royalties. RE Royalties finances investments made in renewable energy generation, energy efficiency management, and sustainable infrastructure. In this episode, we explore how and why this innovative finance company specializes in the growing renewable energy market. Thanks for joining us, Peter.
Hi, thanks for taking the time to speak with me today about the RE Royalties story.
Well, let's get started. Tell us about you.
Sure, I guess I'm a true bi-coastal Canadian, born on the East Coast, grew up in Ontario, or what we Maritimers call Central Canada, and have spent most of my working career on the West Coast with a couple of years in Calgary and another in New Zealand. I'm a geologist by training, and after spending a couple of summers and winters as a prospector in Labrador, I decided that I would retool, and so I then took an MBA at the University of British Columbia. I started in the clean energy space in the early 1990s, developing cogeneration projects to replace diesel generation in Western North America and Australasia. And during this time, I spent a lot of time negotiating commercial contracts with electrical utilities. And as a result, in 2001, myself and four other individuals started a utility-focused customer care company that we had a lot of success with. Eventually grew that business to about 3,000 employees, and were ultimately bought out by a large international consulting company. I turned to wind energy in late 2000s as the president of a publicly traded wind energy developer. We had a lot of great projects and we had a great team, but eventually, like all small developers, we ran into difficulties raising capital to build our projects. In the end, we had to sell all of our development projects to large players who built and still operate these projects. But that learning was one of the keys that I took with me the first time I met my co-founder and partner, Bernard Tan. And just by way of background, Bernard grew up in the mining space and was very familiar with royalty financing. And as a result of becoming a new father and having too many sleepless nights, he had been pondering how he could make the world a better place. And his thought was, why not take the royalty financing model that works so well to help mining projects and apply it to renewable energy? So naturally, he cold called me and asked, would I meet him for a coffee to discuss this crazy idea? I, of course, said yes. And one coffee meeting was all it took. It wasn't like a light bulb. It was like a waterfall. By the time we finished that meeting, we had a vision, a plan, a group of potential clients, a group of potential investors, and we were off to the races. We started the company in 2016, had our first client by early 2017. And since that time, we've invested over $24 million into 85 royalties from solar, wind, and hydro projects located in Canada, the United States, and the European Union. In 2018, we took the company public through an RTO listing on the TSX Venture Exchange, and we're currently raising capital through an inaugural green bond offering with a 5-year term and a 6% coupon paid quarterly. So that's kind of brings you up to today for me.
Great. So can you explain how royalties work?
Yeah, and that's a great question, because royalty financing is not well known, but it is ubiquitous in our daily lives. A lot of times we don't see it. And I'll give you an example. Before this interview, there were probably 4 or 5 touch points in my morning routine, which had a component of royalty financing. For example, when I woke up this morning, I made a cup of Kirkland brand coffee with a Starbucks logo on it. Starbucks was paid a royalty even though they didn't source, make, or sell me that cup of coffee. Similarly, I took my daily vitamins this morning. A pharmaceutical royalty company was paid a royalty on each pill I consumed. I'm on my iPhone right now. Qualcomm is receiving a royalty on the chip that Apple used to manufacture that phone. And before the interview, I was listening to some pump up music, and a music label or musician was paid a royalty for that. After the interview, when I order my lunch through Uber Eats, Uber will get a royalty, even though they did not make my lunch, nor did they deliver it. And to give you another reference point, some of the largest mining companies in the world, like Franco-Nevada or Wheaton Precious Metals, are royalty companies. They get a piece of every ounce of metal that gets sold or pulled out of the ground. And really, royalties have been around since the start of time. Like if you think of a situation where Maybe I have a front garden that I'm not utilizing. You're my next door neighbor. You like to grow vegetables. Maybe you have an idea to grow some vegetables and sell them at the market. We could come up with a royalty transaction where I would say, hey, you're welcome to use my garden to grow vegetables. If you sell them at the market, all I ask is that I get 1 out of every 10 carrots that you harvest. And that is the simplest concept in a royalty model. And as I say, it's been around since the start of time.
So what is green royalty financing?
Right. So what we do is we only invest in renewable or sustainable energy projects. So that means that our investments have a large impact when it comes to reducing carbon emissions. That's really what we want to do. We have a goal of seeing less carbon emissions globally. Our current portfolio of projects generates a significant amount of clean energy every year, the equivalent of powering about 116,000 homes or removing 360,000 tons per year of GHGs from the atmosphere. So in other words, we may be small, we believe we can make a big impact.
So this segues nicely into my next question, which is, what's your objective?
Yeah, the fundamental vision and objective of our company is pretty simple. One, we want to help build a cleaner and more sustainable world. And two, we want to generate a strong economic long-term return for our investors while we're doing it. So we think we can hit both. And we're setting out to accomplish this objective by acquiring a portfolio of long-term, stable, and diversified royalty streams from various operating and near-term operating renewable energy projects that will provide our investors with resilient, sustainable long-term cash flows. We're the first royalty company entirely focused on the renewable energy sector. And our vision and values are essentially to create a cleaner future by investing in renewable and sustainable energy, helping investors earn a strong return and making a positive impact on the environment. And when we think about it, or I think about it as we're hitting for the trifecta: growth and yield for our investors while helping the planet.
So what's your investor relations strategy?
Yeah, because we're relatively small and we're relatively new on the, as our listing is only a year plus old, but we do believe that our product is well suited for retail investors who are, as we stated, looking for growth and yield and a chance to make an impact. We're focusing on investors who are looking for socially conscious investments that also provide a strong financial return. If you kind of think of a 2x2 matrix, for a long time, people who wanted to have an impact on reducing carbon emissions or bringing clean energy to remote communities, it was almost more of a charitable venture. And what we'd like to do is we'd like to combine both. And we compare ourselves with many of the ESG products. And if you think of that's products that are focused on environment, society, and governance, or sustainable and governance, many of the products that you see out in the marketplace aren't transparent in terms of what their underlying investments are. And so if you look, for example, at ESG branded ETFs, you find that many of them are just tracking the index. We look at some and their largest holdings are the Royal Bank. So really, are they making a true environmental impact by investing in the Royal Bank? I mean, it's a good investment for investors, but we feel that we're taking that one step further by democratizing the ability for small investors to make an oversized impact on reducing global carbon emissions by investing with us.
And so who are some of your investors?
We can't mention them by name, but we are widely held with a very democratic base of shareholders, consisting mainly of individual retail investors, family offices, and foundations. Management owns a significant piece. We probably have about 10% of the company that amongst our management team. But interestingly, our shareholder base consists of a lot of people from Vancouver, Calgary, and Montreal, but so far we have relatively limited exposure to Toronto-based investors.
And what do you invest in?
Pretty straightforward. We're looking for renewable or sustainable energy projects. We like proven technology, in other words, stuff that's up and running somewhere in the world. And we have a bias for operating projects, or those that will reach operations in the very near term. We really like near-term cash flow. Our current portfolio of 85 royalties is spread across solar, wind, and small hydro generation projects. And the mix is about 75% solar, 20% wind, and 5% small hydro.
Where do you invest?
We like geographical diversification. And the reason for this is electricity, even though it is a commodity, it does not trade as a global commodity because it's difficult to transport across either provincial, international, and especially across large bodies of water. So you find that markets for electricity are very regional. There's approximately 12 in Canada. There's over 150 markets in the US alone. So we want to diversify our risk across multiple jurisdictions. So in that way, as a global commodity, it's very different than if you were trading or if you were producing gold or oil, for example. All of those things move around the globe quite easily, but electricity is one of the ones that is, not only does it not move easily, but it's very heavily regulated on a regional basis. Currently, we're active in BC, Ontario, Nova Scotia, Texas, and Eastern Europe. In terms of active, I mean that we have projects that we have royalties on in those jurisdictions. We're focused for the short term on OECD countries only, and that's really just a matter of protecting our investors against currency risks and or jurisdictions where rule of law maybe not as well focused as it is in most OECD countries.
And so what are your target returns?
That's the secret sauce that, of course, I can't tell you that exactly, but we are targeting returns in the mid-teens. So what we believe is that for most of our clients, they've got opportunity where using our capital, they can create a lot of value for themselves. And so we're able to price a little bit higher than, say, standard debt, where that might be in the low single digits for some of our clients. So we're a little bit higher priced than that, but we can talk about the advantages a little bit later on of what we bring to our clients.
Yeah, I mean, perfect segue into the next question, which is what are the royalty advantages for investors?
Yeah, and this, again, because the royalty model is well proven in other businesses. So if you think about oil and gas, everybody who has a well on their property in Alberta is paid a royalty by the producer. Similarly, mining royalties have been around for years, pharmaceuticals, music, lots and lots of places. So we recognize the opportunity to take this well-proven royalty business model to the renewable sector, where for some reason royalty financing just did not exist. So we see similar parallels to the exponential growth of royalty financing in the mining and oil and gas sectors, and really we think we can apply that to renewables. And from an investor perspective, there's probably 5 things that really royalties provide. So royalty companies like us present a unique investment value proposition because there's we have very low overhead. So you're talking to a quarter of the company on the phone right now. We don't need to have significant construction or sustaining capital to get an asset operational or to generate cash flow. We can achieve cash flow diversification much more quickly because we're spreading our investments around a number of projects instead of buying just maybe one large renewable energy project. We can spread over 10 projects with the same money. And our economic interest is top line generated, meaning that for our clients, we get paid our royalty as a percentage of their gross revenue. So in renewable energy projects, there's always a lot of discussion about how much energy will I produce on a given site under current weather conditions. And a lot of that is forecasting. Because we look at operational projects, we can come in and say, how much electricity did you sell at the meter last year? And we'll base our royalty on that. We don't have to get into that kind of your engineer versus my engineer debate. And the other piece is that we're a first mover in what is a very large and fast growing renewable energy industry. Last year, 2018, there was over $200 billion invested in renewable energy around the world. that is bigger than, or more money than was invested in either mining or oil and gas during that same time period. So we think we provide our investors with a first mover advantage into a rapidly growing industry that is also helping the planet.
So let's flip things and focus on the client side and discuss what are the royalty advantages for your clients?
Yeah, we focus on small to mid-capitalized developers, owners, and operators. And frankly, they don't get a lot of love from the large financial institutions. It's one of the great ironies of life that if you want to borrow $100 million, the traditional financial institutions are all over you, wanting to provide you with that money. Whereas when you want to borrow $1 or $5 million, the door to the lender's office is closed. And it's kind of similar to how it is for me. If I go to the bank and I want to buy a house or I want to buy a car, big purchases, they're happy to meet with me. If I go in and say, I want to borrow $3,000 to do some work on my house, the first thing they say is, well, why don't you just put that on your credit card? And my response generally is, well, the credit card's going to charge me 18%. If I got a mortgage from you, you'd lend me money at 3 or 4% today. So it is one of the kind of ironies that our clients have difficulty getting the attention of the large lenders because they're not wanting to borrow enough money to generate fees. So for our clients, what we provide is flexible financing that matches well with their incoming revenue stream. So we participate when they do well during high production seasons. And let's face it, in Canada, the solar business is great in the summer, not so good in the middle of the winter. And so we participate with them during the high production seasons, and we also make less money during their low production seasons. So we are tagging along with their cash flow, which is really important for them. We're also flexible with how they use their proceeds. So we have had clients use our financing to acquire, go out and buy new projects, to complete construction of existing projects that they had in the development phase. We've had them use the money to start new development projects. And in one case, our client used our financing to begin a new business, bringing distributed solar generation to off-grid communities in Kenya. So it's very flexible in how we use it. The other model that we pursue is we don't have transaction fees. So we don't charge commitment fees, drawdown fees, reserve accounts, all that kind of thing. So even though our rate may be a little higher than a standard bank, we don't charge upfront capital. So that's money that goes directly into our clients' pockets. The other piece is that we can move very quickly. So our record currently, our fastest deal was we were introduced to a group on December 1, and we had $5 million in their bank by mid-January of the following month. So within 60 days. And finally, what really differentiates us is we love to grow with our clients and we love repeat business. So we're not a one and done shop. We have, of our existing client base, probably 40% of them are already repeat business even over this short term that we've been up and operating.
So who are some of the companies that you work with?
Our clients are a mix. Most, I would say, are not household names, so they wouldn't be people that you would have heard of, although they're well known within the renewable energy space. We are very focused on making sure that our clients are top tier in terms of their abilities. Many of the projects we involve with are operated by top tier operators, such as Northland Power or AltaGas, who are multi-billion-dollar independent energy producers in North America. And more importantly, the electricity generated by the projects is purchased by top tier utilities such as BC Hydro, the Ontario Independent System Operator, Nova Scotia Power, for example. And what this does is it ensures for us two things. So we might be dealing with a small developer, but if their project is operated by a group like Northland Power, we know that it's going to continue to operate for 20 years. If the electricity is being purchased by a group like BC Hydro or the Ontario Independent System Operator, we know that our client will get paid. And that means that we can be relatively sure that our royalty will run the distance that we expected it to. So it makes it a relatively low risk financing for us.
What are some of the trends that you're seeing in royalty financing right now?
We're definitely seeing the maturity of royalty financing. Going back to our mining example earlier, Franco-Nevada, which is now, I think, a $20 billion company, and Seymour Schulich has one of the top business schools in Canada named after him. That company didn't exist in 2000. So definitely these companies are moving. So we're seeing it as a financing option in all industries: mining, oil and gas, pharmaceuticals, consumer products, information technology, restaurants. The Keg is a royalty. Boston Pizza is a royalty company. So it really is becoming more and more prevalent in our day-to-day lives. But so far, we're still the only royalty financing company that's focused on the renewable energy sector. And I would say that is a bit of a double-edged sword. It's nice to be the first mover, and we're pretty excited about that. But we would actually welcome some competition to make it a little bit more well-known in the investment space.
I have to say, you do a really good job of dropping some household names that people have exposure to that they didn't understand previously were royalty companies or situations. So yeah, it's good to hear. I used to work at the Keg, and I didn't know that. So what are some of the trends you're seeing in the sustainable energy space?
Historically, the energy space has probably never been known as exciting. Like, I know when I graduated with my business degree and people were going off to do exciting things, all the exciting people wanted to go and work in Wall Street. And, it was the time of Gordon Gekko, and everyone wanted to be in that world. And I went into the energy world. And so I will caveat this by saying I'm a bit of an energy nerd, but this is like truly an exciting time in the sustainable energy space. Some of the big trends that we're following are the continued asymptotic decline in the cost of solar generation and the order of magnitude decline in the cost of wind generation, coupled with an order of magnitude increase in the efficiency of both solar and wind generation. And what this means simply is that renewables are now the cheapest form of electricity generation in 2/3 of the world, and they're forecast to be the cheapest everywhere by 2030. So that's really exciting. Another exciting piece, because there's a number of them, but another exciting thing is the demand by customers. And I'm talking about large customers like Amazon, Budweiser, Apple, Walmart. They're all pushing to purchase electricity directly from renewable energy products. So Budweiser, I think, has an ad where they show their traditional iconic Budweiser horses pulling a keg of beer through a field, and all of a sudden they go over the top of the hill, and it's going through a field of wind turbines. And their advertising pitch is that 85% of their energy now comes from renewables. So this trend is being driven by the end customer, you and me, the consumer, who are demanding that the people we buy products from are focusing on ESG and focusing on renewables. So that's driving a lot of interest and interesting things. The trend towards distributed generation is also quite interesting. So I think if I'm in a room now and I do a survey and I ask around the room and I say, how many people actually still have a landline? And I'd be lucky if 2 out of 10 people raise their hands. Well, the similar trend is moving for electricity generation. So people are beginning to think, well, maybe I don't need to buy from the utility. Maybe I can make it myself on my own flat top garage roof, or in the back 40 on my farm. And when you think about the long-term trends, there are 500 million people in Africa who are not connected to the electricity grid. They will probably never have long country or continent-wide transmission lines in Africa. They'll go, just like they've gone directly to the cell phone, they'll go directly to distributed generation. So another big trend. The move to portable power as a service. So we're all hearing about software as a service. That's a big thing. But now we're looking at portable power. So, if you've ever had a construction site beside you and some guy's running a diesel generator 24 hours a day, because that's how diesel generators like to run. It's stinky, it's loud. Now you can get a electric generator that's quiet and you only have to draw on it when you need it. So that kind of concept of portable power as a service is a growing trend. And along with that is a order of magnitude decrease in storage and battery costs. The first cell phone I had a battery that lasted 5 minutes, and the cell phone weighed 14 pounds. Now, cell phone batteries much better. If you look at Elon Musk's recent announcements on what he's doing with batteries at Tesla, it's mind-blowing that we're talking now about 1,000 kilometers in range, and it doesn't degrade for 10 years, which is pretty amazing. So, and that ties to the next exciting trend, and I'm almost finished my exciting trend, so hopefully I'm not boring you to tears. But the next one is the advent of EVs. So electric vehicles are here, and EV infrastructure is going to be the next really fascinating piece to see how we can get the infrastructure that's out there so that more people can move to EVs, because essentially it's cheaper to operate. It's 30 moving parts in your engine instead of 2,000 moving parts in an internal combustion engine. Just makes sense. And then there's a ton of exciting things happening in the home heating and building efficiency space. And really, when you parse the global carbon emissions, big numbers, and approximate numbers here, but about a third of global carbon emissions are driven by electricity generation. So renewables are aimed right at that. About a third are by transportation. So the whole move to EV for long haul freight, buses, cars will be targeted at that. And then the last third of emissions are all driven by home heating and air conditioning. So the whole concept of making that building envelope more efficient is, we haven't yet participated in that space, but we're looking at a lot of really neat opportunities, just bringing more efficient lights or bringing heat pumps, and what can we do to help condominiums and co-ops and all of those sorts of groups become more efficient in how they use their building space.
And what are some of the energy opportunities that are unique to Canada?
Probably, we use a lot of energy, so that makes Canada a great target, because we do have huge home heating issues. But the most interesting and unique opportunity right now in Canada is actually the province of Alberta. So, believe it or not, the fastest growing market for new renewable energy projects in the whole country is the home of the oil and gas industry. And there are a few reasons for that. One, they have some of the best solar and wind resources in the country. Two, their current electrical grid is one of the most fossil fuel intense in the country. Probably they and Nova Scotia would be leading the charge on terms of the percentage of electricity that's generated by fossil fuels. And three, most importantly, they were the most forward-thinking province in the country and deregulated their electricity market in 1995. So what that means is an end consumer, let's say someone who's running a warehouse, can put solar panels on their roof, use the energy from their solar panels, and sell whatever excess they have to the grid, meaning to the general population. In British Columbia, for example, where we have a very strong vertical utility that manages our electricity trade, you can't move electrons from place to place. So I can't make electricity at my house and sell it to you at your house. So if I make more solar electricity on my roof than I need, it goes back into the grid, and BC Hydro gives me a very, very low price for it. Whereas if I was in Alberta, I could say to you, if you're my next door neighbor, hey, I'm making more electricity than I need. Do you want to buy some of it? And we could make a transaction between the two of us. So Alberta is a very, very exciting growth prospect for us in Canada.
Yeah, I think that's a little known fact. I think just the fact that it is a deregulated market, and then the fact that there is so much opportunity with, it's the sunniest part of Canada, at least. So the solar opportunity, and then I guess the amount of wind as well as the amount of land available for land or for wind turbines. I had no idea.
Well, and it's driven. I mean, I lived for Calgary in a time, and anyone who's lived through a Chinook, especially if you're down in the Lethbridge area, it's a very windy spot.
Yeah, so lots of exciting opportunity there. It'll be interesting to see how things, I guess, pivot and kind of rebrand in Alberta in the coming years.
Yeah, and interesting that we find if you look at the US, it's quite similar in that the fastest growing market in the US is actually Texas. So right now in Texas alone, there's $80 billion worth of renewable energy projects waiting to get built. And of those $80 billion in projects, 80% of them are solar, because it's it's a fantastic solar resource. And believe it or not, Texas as a state consumes more electricity than any other state in the country. So, and again, they have a deregulated market. So it's quite interesting that the home of the oil and gas business in both Canada and the US is really the fastest growing place for renewables.
Yeah, go figure. So where do you hope to be with your business in 5 years?
I'll take that question from sort of two perspectives. So from an investor perspective, we would like to continue delivering as a company that produces steady dividend growth to our shareholders. We pay a dividend today. We paid a dividend from the day we went public. And we want to be one of those companies that we can point to in 5 years and say, look, every year we've grown the dividend, we've grown our business, nice steady growth. We're not looking to hit home runs. We're looking to, in the baseball analogy, we're looking for doubles. We just want our share to be a nice, safe place for people to put their money, make a high impact, and earn a reasonable financial return. From a business growth perspective, we would like to see royalty financing become a permanent part of the financing stack for the renewable energy business. And by this, again, I'll use the analogy of the mining space. The largest mining company in the world would be probably Barrick right now, or Anglo American, one of those two, multi-billion-dollar companies. But both of those companies use royalty financing as part of their capital stack. So they will issue equity, they will raise debt, and they will also do royalty financing. Right now, the largest renewable energy companies in Canada would be Northland Power or Boralex or Interjex. They're all $1 billion plus. And to date, none of them have royalty financing in their financing stack. So we think in 5 years, once we get our a little bit more critical mass so that we can approach them with a large enough transaction to make it worth their while, we think that royalty financing would be accretive to their shareholders today if we had $100 million that we could raise and invest. So in 5 years, we really want that to be clearly a part of the permanent capital stack for any company that's investing in renewable energy.
So how can people get in touch with you?
That's an easy one. I answer my phone all the time, unless it's one of those groups from Service Canada phoning to tell you that they're going to take away your SIN number for some reason. But we reach by phone at 778-994-1040. That's 778-994-1040. Or you can reach me on email at Peter Leighton, all one word, no periods, and Leighton is spelled Leighton at reroyalties.com. And we also have a website. So I would be remiss if I did not mention that because we're publicly traded, that all investors should do their own due diligence. And all of our financials, our financial statements, our management discussion analysis are all available on our website. And that's www.reroyalties.com.
Perfect. Well, this has been a great discussion. Thanks so much for joining us, Peter.
Thank you so much for having me. I really appreciate it. And I hope you have a great day.
Thanks for joining me on this episode of Green Bull Radio. I'm your host, Kendall Titchener. Please submit guest ideas and ESG-related questions via our social media at Green Bull Radio on Instagram, LinkedIn, and Twitter. Thanks for listening.